Hi, and welcome to the Stockscores Market Minutes for August 1st, 2014. This week, I thought I would do a shameless plug for my book, The Mindless Investor. You know, slow summer markets are a good time to read and learn more about trading. The Mindless Investor provides an overview of my approach to the market. It's good whether you're a long-term investor or whether you are an active trader. You will learn some valuable lessons about the markets, risk management, emotional control, and really my approach to analyzing stocks. You can purchase it at www.stockscores.com/mindless or from amazon.com. All right, let's get into this week's analysis. The SPY had some selling pressure this week, where really all markets did. The Dow was down 300 points on Friday, and that really takes the market back to that upward trend line that I have drawn in green. So this is a weekly chart going back 3 years. And you can see that the selling has not yet broken that upward trend line. Now, that doesn't mean that it can't break the upward trend line. It could happen next week. But for now, the buyers remain in control of the market in the long term. I do think that some caution is warranted anytime you are testing that upward trend line. But for now, I remain bullish long term on the market. The TSX, similar situation, except it's not really come all the way back to that upward trend line, and so we could see some more weakness in the TSX. The energy sector is a little overbought right now, and it's been pulling back for the last few weeks, and I think that that could take this market lower as oil prices are dropping and there is some more pressure on energy stocks. Now, I still like energy stocks longer term. I just think they need to pull back and recharge buyer interest. The TSX Venture continues to build that good basing pattern, but has not yet broken through the red line of resistance, and until it does, I wouldn't get too excited about this market. It's encouraging to see the stability here, but there's really nothing going on in this market in general just yet. Treasuries continue to hold above that downward trend line, but there's a real fight going on between the buyers and sellers right now, and whether it can continue to gather upside momentum. Everybody talks about interest rates going up in the near term, but yet the market doesn't really support that. This market, the US Treasury market, has been in an upward trend since January, and until the green trend line is broken, I wouldn't expect interest rates to start to rise. The US dollar has had a pretty good last 3 weeks, and is now approaching resistance at the highs from January. So my expectation is perhaps a little more strength next week, and then we should see the rise in the US dollar stall and this market trend sideways. Gold is still in that sideways trading pattern that it has been in for about a year, and it's good in the sense that it's stable, but it's pretty boring otherwise. Now, we have good support of that green line. That green line of support actually goes back on an upward trend line going back a number of years. But until we can break up through the red line of resistance that's building this pennant pattern, I'm going to remain neutral on gold. Oil, there you can see the profit taking that we saw this week, and it's really a continuation of some profit taking that happened over the last 4 or 5 weeks, something that I predicted in June when the market was hitting some resistance. It just made sense that we'd see some profit taking in the oil market, and I think that will continue. Could see oil pull back into that $22.50 to $23 range on the oil ETF. And finally, the VIX chart. If you read my newsletter, you'll know that on Wednesday I put out an alert that it looked like volatility was going to increase, and that's exactly what happened on Thursday. I took the long side of the VXX Thursday morning. It's had a good little run here as the market has pulled back. Now, I think that the market may stabilize next week, but I actually think that this VIX could continue to rise. It is set such a low price range that I think we will see more volatility in the market. That doesn't necessarily mean that the uptrend will end in the stock market. It just means we're going to see a little bit wider moves in the market, and that's good for traders. This is to me a great sign. So if the VIX can continue to rally and move in an upward trend, that means that investors are feeling a little more uncertainty, and that makes volatility, and as a trader, we love volatility. All right, so I remain bullish long-term on US stocks. I've lowered my short-term rating to neutral just because of the weakness of last week. It hasn't broken the upward trend line yet, but I do think it deserves some caution. Same sort of situation on Canadian stocks, a little more downside potential in the short term in Canadian stocks. Keep in mind the Canadian market has been the top performing market globally this year, and it's just going to succumb to some profit taking. It's normal. Gold neutral on both the short and long term. Neutral long term on oil, short term bearish. We do have some pricing pressure in the oil market. Profit taking this week takes the equity indexes back to their upward trend lines where they should find support. The risk for the bulls is that those trend lines do not hold, and so it's something to keep a close eye on. Volatility is increasing, which is good for all traders. Gold is range bound and oil is pulling back in a long-term optimistic pattern. I recommend you trade equities with some caution. Volume is very light in the summer, and you can see markets really get pushed around because of that lack of volume. Well, that has been the Stockscores Market Minutes for, August 1st, 2014. Have a great week in the market and trade well.